Welcome to the deep dive. Today, we're tackling something really practical, the core of financial accounting within SAP S/4HANA Cloud.
Hmm.
We've gathered a set of practice exam questions, not just to quiz ourselves, really, but to, truly unlock the essential functionalities of the system.
Yeah, getting under the hood a bit.
Exactly. Whether you're aiming for certification or maybe you just want to speak the language of S/4HANA Finance with more confidence, well, this is your shortcut to understanding what's vital.
Right.
Our mission today is to go beyond just the surface, extracting those actionable insights that clarify even the...
Thinking of these questions as a kind of roadmap,
Yeah.
it helps. By dissecting them, we get not just the right answers, but the why behind them, the logic, the real-world impact.
Yeah.
It's about building that foundational understanding you can actually, well, use.
All right, let's dive right in then. First question. It's about managing the chart of accounts in SAP S/4HANA Cloud Public Edition. And heads up, there are two correct answers. The options are assigning one operating chart to multiple company codes, creating a separate chart for each company code, using country-specific charts for legal reporting, and maintaining a different chart for each segment. What jumps out at you first?
Well, the thing that immediately stands out is that classic tension, between global standards and local rules.
Ah, okay.
And the correct answers really show this. So, A, assigning one operating chart to multiple company codes, and C, using country-specific charts for legal reporting. They perfectly illustrate this balance.
Oh, so.
Think about a big multinational company, right? Having one single operating chart of accounts, it's like everyone speaking the same financial language internally.
Right, consistency.
Exactly. Huge advantage for consolidation, getting that unified view of how the whole group is doing. You can compare apples to apples across different subsidiaries using the same structure.
Okay, that makes perfect sense for the big picture. But then you've got all those different countries with their own specific legal requirements, tax laws. How do you handle that?
And that's precisely where the second correct answer, C, comes in. The country-specific charts of accounts, or local charts as they're often called.
Okay.
These let you meet all those diverse legal and regulatory needs without messing up your standardized operating chart. Think of it like a translation layer.
A translation layer.
Yep.
Interesting.
You keep your internal consistency, but you can map those accounts to the specific formats needed by, say, the German tax authorities or the French ones or whoever. It just avoids a ton of headaches and keeps you compliant locally.
Fascinating how the system accommodates both needs. Okay, next up, bank account management functionality. Which activities does it support? Again, two correct answers needed.
Right.
Options are A, maintaining bank keys and house banks, B, automatically reconciling incoming bank statements, C, assigning bank accounts to payment methods, and D, creating and managing GL accounts.
Okay, so this one's real focused on managing your bank relationships and how money actually flows. The correct answers here are A and C.
Maintaining bank keys and house banks, and assigning bank accounts to payment methods.
Exactly. Maintaining bank keys. That's the basic info about your external banks and your house banks, which
Right.
are your internal representations of your bank accounts within SAP. Oh, that's absolutely fundamental.
Can't do much without that, I imagine.
Pretty much. The system needs to know who you bank with and what your accounts are. It underpins everything. Outgoing payments, often incoming too.
So that's the basic plumbing, kind of. How does C, assigning specific bank accounts to payment methods, build on that?
This gives you some really nice granular control and efficiency. For instance, maybe you want all your big vendor payments, your wire transfers, to go out through one specific bank account. Perhaps it needs special approvals.
Okay.
By linking that house bank account to the wire transfer payment method, you automate that routing. You ensure the right controls are hit. It just streamlines things and cuts down on errors, making sure the right money goes out the right channel. Understanding house banks is also, key for managing liquidity.
Yeah, that level of control sounds really valuable. Okay, shifting gears a bit. Asset accounting. We've got a question on document types for posting asset transactions. 3 correct answers this time.
Okay, asset lifecycle stuff.
Yep. Choices are AB general posting, F90 acquisition with vendor, F47 down payment request, F13 clear open items, and F92 retirement by scrapping. Seems like a specific code for each type of event.
Exactly. And each one has a very distinct job in managing your assets from cradle to grave, so to speak.
Yeah.
The correct ones here are A, B, and E. So A, B, F90, and F92.
Okay, AB, F90, F92. Let's break those down. AB, general posting.
Right. AB is a sort of your flexible friend. It's for asset-related postings that don't quite fit the other really specific categories. And think adjustments, maybe some transfers, things that aren't a straight-up purchase or disposal.
Got it. The versatile option, what about F90? That sounds much more specific. Acquisition with vendor.
You nailed it. F90 is specifically designed for buying an asset directly from a vendor. You get a new machine delivered, you post the invoice using F90. It captures all the financial bits of that purchase.
Makes sense. And F92, retirement by scrapping.
Yeah, this is for when an asset reaches the end of its life and there's no money coming back for it, no salvage value, no sale proceeds. You're just taking it off the books because it's, well, scrapped.
Done. Any others? F47 and F13?
Important processes, sure, down payments, clearing items, but they aren't the primary document types you'd use for the core asset transaction itself, like buying it or scrapping it.
Right. That clarifies the specific use cases. Okay, next question. This one's about the Universal Journal, ACDOCA. Big topic.
Very big.
The question is, in which step of the record-to-report process is the Universal Journal updated? Options. A, when a sales order is created. B, when a journal entry is posted. C, when a billing document is issued. Or D, when a cost estimate is released. This feels pretty foundational.
It absolutely is. And the answer, the correct one, is B, when a journal entry is posted.
When the journal entry is posted.
And what's really revolutionary about ACDOCA is that it's the single central table for both financial accounting, FI, and controlling CO data in S4HANA.
Ah, okay. Both together.
Both together. So the second any financial transaction hits the books and a journal entry is created, boom, it's instantly in the Universal Journal. Real-time integration. It's a game changer.
So it's not like waiting for some batch job later on. It's immediate.
Immediate. Single point of truth. This basically eliminated the need for all that painful reconciliation between separate FI and CO modules that plagued earlier SAP versions.
I can imagine that saved a lot of time and headaches.
Oh, absolutely. It enables truly integrated reporting, profitability analysis, all in real time. A massive leap forward in efficiency and data you can actually trust.
That really does highlight the power there. Okay, let's move on to business partners. The question asks which roles are needed to maintain business partner data for a customer in S/4HANA Cloud. Two correct answers again.
Right, the BP concept.
Options. A, business partner general. B, customer company code. C, vendor purchasing. And D, customer sales area.
Okay, this really gets at how S/4HANA handles master data. It's this business partner approach, very role-based. For maintaining the core financial data for a customer, you need A and B.
Business partner general and customer company code.
Correct. The business partner general role. That holds the basic overarching info. Name, address, contact details. Stuff that's true for that partner no matter how they interact with your company. It's their core identity.
Okay, the foundation. And then the customer company code role adds what?
That adds the specifics for how that customer interacts with one particular company code, one legal entity within your group.
Company-specific details.
Exactly. Critical financial stuff like what's their reconciliation account in the GL, what payment terms do they get with this company code, dunning procedures, things that might actually differ depending on which part of your business is dealing with them.
And the other roles mentioned, vendor or sales area related.
Right. Vendor purchasing is obviously for the procurement side, if they were also a supplier. Customer sales areas are for the sales order process details. Neither is for the core financial master data at the company code level for a customer. It's about separating that core identity from the company-specific financial relationship.
Makes sense. Good data governance. Okay, now let's look at depreciation. Asset accounting again. What happens when you perform a depreciation run? Two correct answers needed.
The depreciation run. A key periodic task.
Choices are A, depreciation values are posted to the general ledger. B, assets are automatically revalued to market price. C, planned depreciation for the period is cleared. And D, a new asset master record is created.
Okay, the two key things that happen here are A and C.
Yeah.
Depreciation values get posted to the GL, and the planned depreciation is cleared.
Let's unpack that. Posting to the GL.
Yep. When you run depreciation, the system calculates how much each fixed asset has depreciated during that period, based on its settings, useful life, method, etc. And then it automatically posts these amounts to the right expense accounts in your general ledger.
Yeah.
That directly hits your P&L, your balance sheet, for that period. It's the actual accounting entry.
Okay, that's the direct financial impact.
Yeah.
What about clearing the planned depreciation? What's the significance of that?
Well, throughout the period, the system often calculates planned depreciation. It's like an estimate, a forecast for the period.
Okay.
The depreciation run takes that plan and makes it actual by posting it to the GL. Once that's done, those planned values for that specific period aren't needed anymore. So they get cleared out, basically zeroed out for that period, making way for the system to plan for the next period. It's part of the cycle.
Ah, I see. It's like finalizing the period's depreciation and resetting for the next forecast.
Exactly. And the other options are definitely wrong. A standard run doesn't revalue assets to market price. It's a different process. And it certainly doesn't create new assets.
Got it. Clarifies that cycle. All right, let's talk period end closing in financial accounting. Which activities are part of this crucial process? 3 correct answers this time, out of 5 options.
Okay, month end, year end, critical
The
stuff.
options. A, foreign currency valuation. B, posting of accruals. C, asset transfer postings. D, depreciation run. E, delivery processing.
Right. Period end is all about making sure your financial statements are accurate for that specific point in time. The 3 core activities here from that list are A, B, and D.
Foreign currency valuation, posting of accruals, and the depreciation run.
Correct. Foreign currency valuation, absolutely essential if you do business internationally. You need to adjust the book value of any foreign currency assets or liabilities based on the exchange rates at the period end.
To get a true picture in your reporting currency.
Precisely. Gives you the real value considering currency swings. Then B, posting accruals. This is all about the matching principle, right? Making sure revenues you've earned and expenses you've incurred are actually recorded in the period they relate to, even if the cash hasn't moved yet. You post accruals and deferrals to get that timing right.
Okay. And depreciation run.
And as we just discussed, the depreciation run, posting that expense for using your assets during the period, is absolutely a fundamental part of closing the books correctly.
What about the others? Asset transfers, delivery processing.
Those are more operational things. They can happen anytime during the month. They aren't specifically defined as core period end closing steps in the same way as valuation, accruals, and depreciation are. Those 3 are really about finalizing the financial picture.
Right. They feel more like ongoing business events rather than closing tasks. Okay, next. Automatic creation of payment proposals. What controls this in S/4HANA Cloud?
Ah, the payment run. F110 for those who know the old codes, though it's apps now.
The options are A, house bank configuration, B, payment run parameters, C, dunning level, D, tax codes.
The main control here is definitely B, payment run parameters.
Payment run parameters, tell me more.
Well, when you kick off an automatic payment run, you have to tell the system what you want it to look for. You define the parameters, things like which company codes, what are the due dates for the invoices you want to consider paying, which vendors or customers, which payment methods are allowed for this run.
So you're setting the rules for the search, essentially.
Yeah, exactly. You give it the criteria, the system then scans all the open items, finds everything that matches your parameters, and generates a payment proposal.
A suggestion list.
Precisely. A list of what it thinks should be paid. Then, importantly, you get to review that proposal. You can block items, change things before you actually approve it, and the payments go out.
So the parameters drive the proposal, not the final payment directly.
Correct. And while House Bank Config A is essential for payments,
Yeah.
it doesn't decide which ones get proposed. Dunning Level C is about collecting money from customers, not paying vendors. And tax codes do are about tax calculation, not payment selection. So it's all about those parameters you set for the run. Got it. Parameters are key. Next, let's talk SAP Fiori apps. Benefits for financial operations. 2 correct answers.
Ah, Fiori, the user experience layer.
Options: A, role-based access. B, classic SAP GUI interface. C, real-time data analytics. D, reduced transaction volume. Fiori brings some really significant improvements for finance users. The 2 main benefits listed here are A, role-based access, and C, real-time data analytics.
Rule-based access.
Yeah, Fiori apps are designed around specific job roles. So an accounts payable clerk sees different apps and different information than, say, the chief financial officer.
Makes sense. Tailored.
Exactly. You only see what's relevant to your job. It cuts down the noise, makes it much easier and faster to do your work compared to navigating the huge, older menu structures, much less overwhelming.
Yeah, I can see that being a big plus.
Yeah.
And the real-time data analytics.
This is huge. Many Fiori apps, especially in finance, have analytics embedded right in them.
Oh, okay. Not separate reports necessarily.
Often not. Directly in the app you're using for your task, you might see dashboards, KPIs, charts, graphs, all using live real-time data. An accounts receivable manager might have an app showing overdue items, but also right there an aging analysis graph, trend lines.
So insights right where you need them.
Exactly. It empowers quicker, more informed decisions right in the flow of work. Now, option B, the classic GUI, that's the old interface, so not a Fiori benefit. And D, reduced transaction volume. Fiori improves efficiency, but it doesn't magically make fewer invoices appear.
Right. It helps you handle the volume better.
Precisely. Better user experience, better insights.
Okay, final question. Dunning blocks. What happens if you assign a dunning block at the line item level?
Getting specific here with receivables management.
Options. A, all line items for that customer are excluded from dunning. B, the dunning process skips only the selected item. C, a credit memo is created for the line item. D, a payment term is adjusted automatically.
This is about precision. The correct answer is B. The dunning process skips only the selected item.
Only that specific line item.
Yes. Let's say a customer disputes one specific invoice, or even just one line on an invoice. Maybe there's a query about a damaged shipment related to that line.
Okay.
You could put a dunning block just on that specific line item. The automatic dunning run will then ignore that item. It won't send reminders about it, but it will continue to dun the customer for any other overdue, undisputed items on their account.
Ah, so you can pause collections on a specific disputed point without stopping the process for everything else they owe you.
Exactly. It's really useful for maintaining good customer relations while sorting out a specific issue, but still pursuing the rest of the legitimate debt. Very targeted control.
That makes a lot of sense. Avoids blanket stops.
Right. And the other options are incorrect. It doesn't block the whole customer. A, doesn't create a credit memo. C, doesn't change payment terms. D, it's just a very specific do not done this item flag.
Wow. Okay, this has been incredibly insightful. As you think about how these individual areas, assets, banking, payables, receivables, the journal, all interact, what further questions does that raise for you? How does mastering these foundations help you see the bigger picture of strategic financial management within S/4HANA Cloud? How do they support broader business goals? Definitely something to mull over as you continue your learning.
Good point. Food for thought.
Indeed. Well, thanks for joining us for this deep dive.